This is the second video on the final account with adjustment. Now in this problem we're going to see the treatment of prepaid expenses and the treatment of outstanding income, and also the treatment of bad debts, further bad debts, provision for bad debts, and discount on debtors. So first of all, regarding treatment of prepaid expenses, so any prepaid expenses will be subtracted from the respective expenses either in the trading or profit and loss account, as the case may be, and also to be shown in the asset side of the balance sheet. Then the treatment of outstanding incomes, remember the outstanding income is credited to the profit and loss account and will be added to the respective assets in the asset side of the balance sheet. Then regarding the treatment of bad debts, further bad debts, provision for bad debts, and discount on debtors, this we have discussed in the previous video. So let me remind you again regarding the treatment of the bad debts in the profit and loss account. So first of all, you take the bad debts as per the trial balance, then add further bad debts. This will get from the adjustment. Then you add a new provision for bad debts, that is as per the adjustment given in the problem. Then for the calculation of new provision for bad debts, we have to take debtors from the trial balance, then minus the further bad debts, then into the percentage of new provision as given in the adjustment itself. Then you less the old provision, which will get from the credit side of the trial balance. Then the next one is for the treatment of discount on debtors. Remember, discount on debtors will be shown on the debit side of the profit and loss account. So how to calculate discount on debtors? So you take debtors from the trial balance and minus further bad debts minus the new provision into the percentage of discount on debtors as given in the problem itself. Now let us look how debtors will be shown in the asset side of the balance sheet. If there is further bad debts, new provision, and discount on debtors. Remember, in the balance sheet you have to take the debtors as per trial balance, then you less the further bad debts, you less the new provision as calculated, then you less the discount on debtors as calculated. So the remaining balance will be your debtors as on that particular date of the balance sheet. Now let us look at this particular problem. It says prepare a trading and profit and loss account of Mr. Green Garments for the ending to the 1st March 2018 from the figures as given in trial balance. So even though they did not ask for the balance sheet, we are going to prepare the balance sheet to get the complete final account. Now listen here carefully. If a proper and a correct trial balance is given, then in that case all assets and all expenses or loss will find on the debit side of the trial balance. Then the income and the liabilities and gain you'll find from the credit side of the trial balance. So now again, before the preparation of the trading and profit and loss account and the balance sheet, let us identify which item will go to the trading account, which item will go to the profit and loss account, and which item will go to the balance sheet. Now the first item on the debit side is opening stock. So this opening stock will be shown on the debit side of the trading account, which is the first item. Then purchases, debit side of the trading account. Then returns inward, this will be subtracted from the sales to get the net sales. Then postage and telegram, this is an item of profit and loss account. Then salaries also will be shown on the debit side of the profit and loss account. Wages will be shown on the debit side of the trading account. Then rent and rates, packing and transport charges, then general expenses, insurance, these items will be shown on debit side of the profit and loss account since these are indirect expenses. Then debtors, cash in hand, cash at bank, and machinery, these are assets, will be shown on the asset side of the balance sheet. Then office lighting and heatings charges, this will be shown on the debit side of the profit and loss account. Then discount bad debts, this will be shown on the debit side of the profit and loss account. And investment is an asset, will be shown on the asset side of the balance sheet. Now let's look at the credit side. So sales will be the first item on the credit side of the trading account. Then the purchase returns, we are going to subtract from purchase to get the net purchase during the year. Then creditors and bills payable, these are liabilities, will be shown on the liability side of the balance sheet. Then this is the discount received, so it will be shown on the credit side of the profit and loss account. Then we have provision for doubtful debts. Remember, provision for doubtful debts given in trial balance, this is known as the old provision for doubtful debts. Then the interest received, this is an indirect income, will be shown on the credit side of the profit and loss account. And capital is a liability, will be shown on the liability side of the balance sheet. Now let us look at the adjustments. So first of all, depreciation charge on machinery at 5% per annum. So the amount of depreciation will be shown on the debit side of the profit and loss account, and the same amount of depreciation will be subtracted from machinery in the asset side of the balance sheet. Then adjustment to says further bad debts is rupees 1,500. Then the discount of on debtors, it is at the rate of 5%, and make a provision for doubtful debts at the rate of 6%. Remember, this make a provision for doubtful debts given in the adjustment, this is known as the new provision. Then wages prepaid, so this is a prepaid expenses. So prepaid expenses will have to be subtracted from the partial expenses. So in this case, this prepaid expenses will be subtracted from wages and also to be shown on the asset side of the balance sheet. Then interest on investment, so here we have investment for rupees 23,100. so interest on investment during the year will be 5% per annum. So this is an outstanding interest on investment, so it is an income, so it will be shown on the credit side of the profit and loss account. And remember, this interest on investment is an indirect income, so that is why it's being shown on the credit side of the profit and loss account. Then we have closing stock, so this will be shown on the credit side of the trading account and also shown on the asset side of the balance sheet. So first of all, let us look at the trading account. So it starts with the opening stock for rupees 35,000. Then you have purchases. Then remember, you have to less the purchase return, so to get the net purchase for rupees 1,19,000. Then wages, as I've told you, any prepaid expenses has been subtracted from that partial expenses. So I have a prepaid wages of rupees 1,000. So the actual wages during the year is rupees 2,000. Then we take sales on the credit side. Then we have to less the sales return to get a net sales for rupees 2,25,000 and the closing stock for rupees 10,000. So since the credit side is greater than debit side, we get a gross profit for rupees 79,000. So this gross profit will be brought down to the profit and loss account on the credit side, that's for rupees 79,000. Now let's look at the debit side of the profit and loss account. So it starts with bad debts. Remember, bad debts 3,500 you will get from a trial balance. Then you add further bad debts. This will get from the second adjustment for rupees 1,500. Then you add the new provisions. Remember, the calculation of new provision for doubtful debts. So this is from adjustment number 2. So you have to take debtors. Remember, the amount of debtors on the trial balance rupees 50,000. Then you minus the further bad debts, so into 6%. Remember, this is the new provision rate, so it will come to rupees 2,910. So you'll get here 2,910. Then you less the old provision. This old provision rupees 4,500 you'll get from the credit side of the trial balance. So the bad debts for the will be 3,410. Then you take the discount on debtors. So now let's see the calculation on discount on debtors. Remember, discount on debtors, you take the debtors, then you minus the further bad debts, then you minus the new provision which we have calculated from here, then into the percentage of the discount on debtors. So the percentage of discount on debtors is 5%. So you'll get 2,279.5. So we'll round it up. So you'll get 2,280. So here discount on debtors is 2,280. Then you'll take the postage and telegrams, salaries, rent and rates, packing and transport charges, then general expenses, then insurance discount. This you will get from the trial balance. Then regarding the depreciation and machinery, so depreciation is 5%, then the machinery is 20,000. So 20,000 to 5% will get here 1,000. Then office lighting and heating, this will get from the trial balance for rupees 5,000. Then here we have the interest investment. Remember, this is from the second last adjustment. So the interest on investment is rupees 1,155. So how do we get this? So the investment as per trial balance is 23,100. Then the interest on investment, that is from adjustment number 4, it is 5%. So 5% of 23,100 you get 1,155. Then discount will get from a trial balance, and also interest received will get from the trial balance. So since the credit side again is greater than debit side, you'll get a net profit which we have to be transferred to the capital account for rupees 52,565. Now let's look at the balance sheet. We'll start with the liability side. So we'll have creditors, bills payable. This will get from the trial balance. On the credit side, you have capital for rupees 75,000. So since it is a net profit, you have to add a net profit. So your capital come 1,27,565. Then cash in hand, cash at bank will get from a trial balance. Then debtors from the trial balance, it is rupees 50,000. Then you less the further bad debts, you less the new provision, then you less the discount on debtors. So debtors as on 31st March 2018 will come to rupees 43,300. Then we're going to look at investment. So investment is 23,100. Then you add interest on investment for 1,155. So the total investment, including the outstanding interest, will come to 24,255. Then machinery is 20,000. You have to less the depreciation for rupees 1,000. You'll get 19,000. Then prepaid wages, that is the prepaid expenses. So remember, prepaid expenses will have to be shown on the asset side of the balance sheet. Then also the closing stock for rupees 10,000. So both sides you'll get 1,57,565. So both side tally. I hope you understand. Thank you.